Okay, so we've got some good stuff to get into today. First of all, I will tell you it is interesting watching the Trump administration form. The cabinet picks, I think, so far are pretty darn good. I am most excited, though, not about any of the picks you've heard of. I'm most excited about the flagship two guys, the, the Elon and Vivek team for DOGE, the Department of Government Efficiency. And I am just so optimistic about what they're going to do because it's not only about the money they will save us, the money they will save the taxpayers, the money they will save the country, but it's also about making government better. You know, just millions of people, these people hiding in their government jobs have basically made us the victims of their Peter principle, right? They've risen to their level of incompetence a long, long time ago, and we are all suffering for it. I mean, how many times have you called or tried to get assistance from a government office and you dealt with some bureaucrat who didn't care? They get paid anyway. You know, imagine how much better they will get when they are, number one, incentivized. Number two, they see so many of their colleagues getting layoffs, getting pink slip because the government is no longer going to be this bloated, just ridiculous, terribly inefficient entity that it has been. It's going to take these guys a while, but they're going to do some really good stuff. I have a lot of faith in this, and I'm very, very excited about it. And this will allow the government to spend money on more important things or to just lower our taxes and stimulate the economy that way. Either way, we're all going to win. Everybody is going to win from a more efficient government. And you know, interestingly, the people who have been hiding out in their jobs, just getting away with being lazy sloths, they will actually win too. Because, you know, when you take a government job, you tend to lose your edge. You tend to become an inferior version of yourself. Whereas if you had to compete in the free market, you become better. I mean, you just get better, right? You get better, you get on your game, you're more attentive, you take better care of customers, you take better care of everybody you deal with, all your stakeholders. So this is going to be a great thing, folks. Just mark my words. Really, really excited about this. But inflation is the watchword of the next 4 years, really of the decade, really probably of the next couple of decades. Into the 2040s, we'll probably see a change, but boy, we got a lot of debt and it's rising fast and it's going to keep rising for quite a while. And here is an article about housing, right? Rising housing costs are creating sticky inflation. Inflation is a very sticky thing. Well, overall inflation has moderated significantly. Donald Trump's election victory clouds the future, right? And look, everybody keeps asking me, and I keep really thinking a lot about it myself. Well, what would you have said differently if Kamala won when it comes to inflation? You know, it's really kind of the same. I don't think the advice changes too darn much with, you know, a Republican or Democrat victory, but either way, inflation is the watchword. And I've taught you for the last 21 years how to profit from inflation significantly. So again, it's not great overall for society by any means, but it is great for you as a real estate investor. A really, really great opportunity for you to profit from inflation. And inflation is going to be with us for quite a while. Of course, when I say that, that doesn't mean that if I'm projecting real estate prices or inflation rates out into the future, it doesn't mean that there will be little bouts of ups and downs. Of course there will. I'm just making the big macro projection, right? The big macro prediction or forecast. And that is the way you should invest. You know, as income property investors, we don't invest day to day. We don't watch stuff day to day. We invest for the big macro mega trend, and that is how we profit. That is definitely how we profit. So speaking of which, Of course, we run a nationwide referral network where we can help you buy properties in markets that we like from teams and providers and sellers that we like, that we recommend. And again, this is a very dynamic thing. I cannot tell you the number of times, almost every time, in every one of the hundreds and hundreds and hundreds of relationships that I have had with different providers over the years, over the 21 years I've been doing this. They all start out good. And then we refer them a lot of business. And then they get very busy and the service starts to suffer. The communication starts to suffer. And then they usually move into the ungrateful mode. Whereas at first, they're totally grateful. They say, Jason Hartman, you changed my life, right? You have given us so much business. It's so great. And then it goes into the too busy mode where they just can't handle the business. And then it goes into the ungrateful mode. We don't need you type mode, and we don't care about your clients and your referrals, right? And so this is a dynamic thing. And that's why we are always changing and recommending the new providers, the new best local market specialist in any given market at that time. So if you're one of our thousands and thousands of past clients, always check with your investment counselor, check in with us as to who we're referring at the time, because things are always changing. Markets are changing. Teams are changing, sellers are changing, developers are changing, local market specialists are changing. It's all a dynamic thing. So keep in touch with us and let us guide you and let us help you. So here's an example of just one of many properties we have. You'll find it jasonhartman.com on the properties page. This is the 1-year projection on brand new construction, this brand new construction. So you're starting out great. This is in the Birmingham metro area, Birmingham, Alabama metro, 1,837 square feet, $420,000. And initial cash invested in this projection is about $119,000. You're buying this for $229 per square foot. And as you can see, if you're watching on video, the spec level is excellent. I mean, look at the finishes, look at the elevation on these properties. These are great, great looking properties. Your monthly rent projection per square foot is $1.82 per square foot. So that brings your overall gross rent projected at $33.50 per month. So here you've got an A-class property. You're starting out with a brand new property, so no concerns about maintenance. And you're going to get A-class tenants most likely in a property like this. This is a really nice Class A property. Now, these performance that you're seeing on the screen, if you're watching on video, you can make these yourself. Just go to propertytracker.com. That is our software company. And when I bought the company several years ago, I decided to make it free. Okay, it is free. Now, you can upgrade your plan, of course, but you don't have to run these performas and really use the best real estate evaluation software in the industry. This is it. Property Tracker. Okay, go to propertytracker.com, get your free account if you don't have one already. So here we're projecting 25% down. And again, these are higher rates today. So nothing's as good as it used to be, folks. It's not as good as it used to be. And here you've got 6.75% interest. Let's go to the next page. What I did is I took this one-page projection and I split it up, so I blow it up on the screen for you. You've got your property taxes, your insurance, your management fees. And again, we recommend self-management, and we will help you do self-management to get optimum performance out of your properties. But if you don't want to do self-management, we refer you to our recommended property managers. You can use whoever you want. It's your property, but we will recommend you and we will help you oversee that relationship. So your NOI, your net operating income on this property, is projected at just over $2,200 a month, and your cash flow projected at $455 per month positive cash flow. I mean, that's phenomenal. This is getting close to $6,000 a year in positive cash flow on this property. Your first year appreciation with the 6% appreciation standard that we have in here is $2,100 in appreciation, gross equity income, just over $2,500. You've got some tax savings in there. And then your debt coverage ratio, 1.26%. And just going down to your overall return on investment projected at 26% annually. And that's based on a cap rate of 6.4%. So this looks pretty darn good. I mean, as I always say, if it only goes half as well as expected, would you be happy with a 13% annualized return on investment on your property? Of course you would. Nobody would say 13% annually is disappointing, right? But it might be twice as good. If we get a Trump bump, it might be 3 times as good. During the COVID era, our investors saw these projections blown out of the water. They were so much better than expected. It was phenomenal. So again, we can help you buy properties like this. We can help you build a whole portfolio. We've got some clients that have got a portfolio nearing 200 properties. We've got some clients that just buy 1 property per year. Okay, so wherever you are in your income property journey, we want to help you create that solid financial future and really insulate yourself from the inflation that is going to persist for a very long time to come. You know, it's a multidimensional asset class. I mean, people say, well, how can you get, if they don't understand how to do the math? And that's why I really recommend they use the software. Okay, understand how to do the math. If you want a 30-minute video on this, it's totally free. Go to jasonhartman.com. Right on the front page is the video that goes in deep to every single number on these performas, helps you standardize your data, and that's all at jasonhartman.com. Right on the front page. Just watch that free video. And, I really recommend everybody watch that video every 6 months or so, just to remind them how to focus on the numbers and how to really do the math on an income property. But it's a multidimensional asset class. So you earn your return on investment in many, many ways. And that's why a 26% ROI, because you're using some leverage here, is very realistic. I mean, look at the assumptions we're making. Only 6% appreciation. We're assuming a vacancy rate. A lot of these other cheesy promoters out there that you might have come in contact with, they'll assume no vacancy. That's not true. Real life properties, you have vacancy. We're assuming 1 month per year. We're assuming a management fee of 8%. You could self-manage and do much better than that. Assuming maintenance. This is a brand new home. This is a brand new investment property. So you probably have 0 maintenance your first couple of years, but we're assuming 2%. Conservative projections with conservative assumptions, and still an overall return on investment projected at 26%. Our investment counselors can talk to you about this property or properties in any of our other markets, whether they be Indiana, Tennessee, Florida, Alabama, Arkansas, whatever. We've got properties all over the country in many, many markets. So touch base with our investment counselors through jasonhartman.com, and we will be glad to assist you in building a fantastic income property portfolio.